Alright traders, welcome back here. This is the last video of the week and the last video of the ICT institutional reference points. There are 7 of them and I've taken time to go through every single one of them, explaining them in detail. Now if you are still struggling with understanding them, you have to go through the videos and get the best out of it. So in this particular video, I'll be discussing what exactly is an old high or an old low with you. They are basically a simple concept you understand. Whenever you have price moving, you create highs and lows. So as soon as a high is violated, it becomes an old high. All right, so let me show you this. We have price going up in this manner. We have price creating this particular high right here. So what are you expected to have whenever price creates a high? Basically liquidity. All right, so this is a high that price created right here, this place. So as soon as price moves away from there, it becomes an old high. So price will always seek for liquidity above it and continue movement to create a new high. All right, and this is a low. It's an old low because price quickly moves away from it and it created a new low right here. All right, so every time price moves away from it, it becomes an old high or an old low. All right, that's basically what it means. All right, this is it. Above here, we know there is liquidity and price is coming above it to pick liquidity above this old high. It created a new high right here. This is a new high and this is a new low. So above this new high, what do you think is the liquidity? So price will move above it and create a new high where there is going to be a residing liquidity or resting liquidity. So as price moves in this manner, you're going to see liquidity above here, and price will seek to go above it to grab liquidity. Above an old high and below an old low is where you find liquidity. All right, so all this place there is liquidity resting, both the ones that were cleared and the ones that are not yet cleared. So price will always come back and clear them. All right, you can see even in the future price is coming back to clear all the liquidity below here. That is why price is coming down to that level and it's creating the same thing, creating a low, violating it, and create a new low, violate it. It violates this new low. A high is being formed. All right, old high, old high, old high. Liquidity is resting, both a buy side liquidity and a sell side liquidity. A buy side liquidity is liquidity resting on these areas on the buy side, and the sell side liquidity is basically liquidity resting on the sell side. So all these places you have an old high that is created. As price is coming, is going to locate that place to grab liquidity. So above here is where liquidity is, and you can see price moving above it to sweep the liquidity. Price creating a high here, moving above it to sweep liquidity. So basically this is what old high and old lows means. I think this is the easiest to understand among all of them. So you will hear me hence speaking about these things such as old highs, old lows, mitigation blocks, breaker blocks, order blocks. All these terms are very important for you to understand because subsequently henceforth we're going to be discussing more of them and you're going to get more and more acquainted with all of them. All right guys, so I'll be ending this particular video for the week. Make sure you watch everything and you can go to the training ground and get the best out of it. Thank you for watching. See you in the training ground, and next week you're going to have more and more videos. Thank you.